What would you do if you received $20,000 that you didn't know was coming to you? Two experts are with me now, two separate sets of ideas. It is time for Secret Stash. Today I'm going to be playing the role of this investor, so you can see a 75-year-old man, retired, but spends $100,000 per year on his 3 grandchildren. Went to private school, other things, camps. He receives a pension of $2,200 a month and has about $300,000 left in his bank account. Joining me for their take on what he should do with the unexpected $20K is Michael Lee. He is founder and managing partner at Tiger Wealth Management. Out from California, we have Jason Rotman. He is president at Lido Advisors. Jason, first and foremost, what should this investor do?
Well, first of all, I mean, the first thing that comes to mind is the guy has 300 grand in his bank, yet he's spending a third of that each year on his grandchildren. Deirdre, what are you thinking if you're this guy here? I mean, how much longer, do you think you're going to live? Hopefully it's longer than 3 years. So the first thing I would do is try to reel in the spending of the $100,000 a year, but to focus on the $20,000 found money, which is the more fun topic. I think this gentleman needs to focus on growth, even at 75, conservative growth. So the two stocks that I found are Microsoft, which everybody knows, and Canadian Solar. Microsoft is on the more conservative side because they pay a nice dividend, but they're also on the growth side because the new CEO is making tremendous inroads into cloud, gaming, and virtual reality, which are really 3 technologies of the future. So I think Microsoft is a growth stock as well as a kind of an income stock, and Canadian Solar is definitely not an income stock, but solar is the future. So I think that's a pretty aggressive investment as well to try to bring some of the returns going here.
Okay, Jason, so I hear you. Be aggressive even though he's 75, and tell his kids that they have to sort out their own kids and cut back at least a little bit. Michael, what's your take?
So I got to agree with Jason. It's time to look at this guy and say, hey, buddy, time to pump the brakes with the spending. That's just simply unsustainable. If they're in any type of college or any type of private school and the parents can't afford that, there should be some sort of financial aid available for them, hopefully, ideally. Otherwise, you got to make a lifestyle change because the rubber's going to hit the road pretty quickly there. For the $20,000, I'm definitely in the stock market camp. We're a firm believer that the Fed's going to raise rates sooner rather than later, and it's as a result of the economy just exploding. So we favor both financials and consumer discretionary. And the financial side, the money center banks, as we've talked about before, we really think that rate raise is going to be super accretive almost overnight. You're already starting to see some of that in the price action of the stocks, other people getting ahead of this trade, and then also the consumer discretionary side. Walt Disney with the Star Wars movie later this year, Frozen next year, and Under Armour is another one we absolutely love.
All right. Good stock picks. Our advisors in good stead. Michael Lee, Tiger Wealth Management, Jason Rotman, Lido Advisors. Thank you so much. We'll be right back.